guys, Uno here for an American family math moment. I'm going to explain to you the difference between taxpayers and tax takers. So we're going to start off with, I got $75 to represent $75,000 of family household income. Now I know all families don't make $75,000, and I know some families make a lot more. But I've decided to use $75,000. Just go with me here for my lesson. So we got $75,000. $12,000 or $12 is going to represent the federal income tax they pay every year. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Okay, so they pay $12,000 in federal income tax. Now, most families have to pay another $3,000 in state income tax. It's 1, 2, 3. Okay, so now most families that own a home have to pay property taxes. Those property taxes are about $4,000 on average. I'm just making that number up, but that's what I'm just guessing. 1, 2, 3, 4. The next thing we have to pay is sales tax. When we live in most states, there's some sales tax when you buy goods. So that's another $2,000 a year. 1, 2. Then we got to pay car automobile tax, which is in the form of your vehicle registration. It's in the form of your tolls that you pay when you drive through tolls. When you buy gas, there's gas tax. So that's another $1,000. Now, I'm not taking into consideration all the other taxes we pay, but so far, the American family has paid out $22,000 or 30% of the $75,000 they made before they've even bought a gallon of milk, they've made a mortgage payment, or they've bought their kid a pair of sneakers. So that's the taxpayer. Now we got the tax taker. The tax taker, in some cases, make at least $18,000 a year in housing. It's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18. $18,000 a year in housing. Then they get another $6,000 or so worth of food. 1, 2, 3, 4, 5, 6. Then they get about $4,000 sometimes in daycare. 1, 2, 3, 4. Then they get $7,000 in health insurance. 1, 2, 3, 4, 5, 6, 7. Then they get that crazy Obama phone. Why they get a phone is beyond me. I know they say it's for security and stuff like that. That's nuts. 1, 2. So now, before they've been given any welfare for actual discretionary funds, they've gotten $37,000. Do you see the problem here, guys? What the government fails to realize is they can't give these people this $37,000 unless they take it from these hardworking people that went out and earned it. So while you're paying $22,000 in taxes, you're giving it to the guy that's getting $37,000. It's ridiculous, guys. The people on welfare, now I know some people actually need and deserve welfare. I get that. But the vetting process needs to be much more stringent. And we need to get people that are able to do something to do it. If you can't run, then you can walk and do something. If you can't walk, you can sit and do something. We need people that have pride in themselves and have a work ethic. Everybody's just become so lazy. It's like pigeons in the town square. They just come for the free bread that's going to be there every day by the old lady that's throwing it out. Sooner or later, the old lady's going to die and there's going to be no bread. And then what's going to happen? The pigeons are going to starve because they can't take care of themselves. We really need to get a society that's responsible for themselves and doesn't tax the hardworking people. Now, that's an Uno update on financial affairs in America. Now, if you'd like to take a moment and share, give me a thumbs up, give me a thumbs down, make a comment, tell me I'm right or wrong. I know this is real simple math, and I know that I had some of my numbers maybe a little skewed, but the end result is still the same. We're taking too much money from hardworking people, and we're giving too much value and benefits to people that aren't willing to work.